Sell America. That is what the world stage is saying this morning. Folks, we need to be very, very careful. If our friends and allies start to dump U.S. assets, it will get ugly and get ugly quickly. I believe we have two trends that are actually running parallel that both are pushing sell America. First is what is called the yen carry trade. Simply said, for the longest time, you could borrow near zero in Japan. You could buy US assets with juicy returns, and you would make a spread. It is estimated that this trade is somewhere between $700 billion and $2 trillion. If you haven't been paying attention, the Japanese long bond has been rising and setting records daily. We have also seen, up until this morning, the US 10-year falling slightly. As that spread collapses and you add in currency risk, you could see a situation very soon where the Japanese are forced to sell treasury bonds and repatriate yen by selling assets. So that is going on. And then, oh, by the way, we now have a second and probably more urgent track, and that is being executed by President Trump. President Trump obviously went into Venezuela, took out a dictator in a very successful operation. That has set off alarm bells around the world. And then, of course, we have this desire for Greenland. And at the moment, the seller, Denmark, has no interest. So what does President Trump do? Of course, he leans on his favorite weapon, tariffs. Now, Europe, generally speaking, is a friend. However, they're a little upset. They are talking about potentially the bazooka eliminating American assets from Europe, things of that nature. But the reality is a trade war, a nasty trade war, might be in the offing with Europe. So if you already have threats from Asia, you now have threats from Europe. I don't know what to tell you. Sell America is building steam. Now, you could see this in the US dollar. The US dollar is weakening. You could see this in the long bond. It is weakening, thus rates are shooting higher. You could see this in gold and silver. Interestingly enough, you're not seeing it in Bitcoin. I wonder what the Bitcoin maxis are saying this morning when gold and silver are setting records, and yet Bitcoin is down thousands of dollars. Is Bitcoin nothing more than just a NASDAQ stock like risk on? But we have to go back to the yellow metal and the silver metal to see real risk diversion? Seems likely. Maybe Bitcoin isn't the next best thing. It's just another flavor of risk on with the ability to trade 24/7. I don't know. Let me know in the comments below. But yes, I do think we have to be very careful. You can watch the 10-year bond. The 10-year bond is ripping this morning, up like 5 basis points, something like that. You can expect mortgage rates to follow after lunch sometime. And we have to be really careful. The 10-year note could go on a run here and take mortgage rates up, which would drastically change the optics, I think, for President Trump. Right now, it does not seem to be going the way he would like. I saw an interesting report. I hope this is not you, but 23%, so let's just call it 25% between friends, 1 in 4 of you watching did not take a single vacation day in 2025. You have a job, you worked a job, you did not take your allotted vacation, not even a single day. I think that is sad. One of the things that you could look up, an article I wrote in school and on LinkedIn, is something about FIBI, stands for F it, book it. Folks, you only get one go at this life. Don't spend all your days working. try to make some memories, try to have some experiences, try to get well-rounded. The world's an amazing place. So again, don't go through life never taking vacations. That would be unfortunate. Again, I think we are on the cusp of a potential nasty trade war with Europe that could spread to Asia. These are things that could really dent the stock market. Last I checked, I think it's down 500 points as the Sell America trade, I think, picks up steam. Got an article about rents. Rents from 2019 to 25 were up an average of 17%, but that's actually not the full story. What you could say is Class C properties were actually up the most. Class C was up 20%, where Class A was up the least. It was only up 12%. Why? Supply and demand. I don't know why communists and socialists don't get this. Shout out New York. But if you deliver a lot of product to market like Class A, rents go down, or at least rents don't go up as much. And once again, we see that where nobody's producing Class C properties. So those went up 20%, where everybody produces Class A, and it was up 12%. Wall Street Journal wrote an interesting article over the weekend talking about all the tech titans in Silicon Valley, doing this last gasp at getting rich. Turns out the tech world thinks that American dreams are dying. It's kind of a shitty headline. Thank you, Wall Street Journal. But the real point of the article is with the rollout of AI, money will become worthless, which really got me scratching my head. If money is worthless, why are the tech oligarchs trying to get rich? I don't get it. But hey, it is what it is. Again, the 10-year note, last I checked, was at 4.259. It's again up, highest since September of 2025. Scott Bessent is on the news saying that he thinks the Supreme Court will upheld President Trump's use of tariffs. I didn't check this morning, but last time I checked the betting markets are on the other side. They actually think the Supreme Court will rule them illegal and force refunds or something. Let's congratulate some folks for joining school. Jason and Idle, thank you for joining. The link to join school is right there on the bottom of your screen. Why do you want to join? Well, the only place you can live stream our Vegas event, which is less than a month away, Saturday and Sunday, is if you join school. You can hear from folks like Jason Hartman, Pace Morby, and many, many others. You can hear about co-living, ground-up development, international. There's all kinds of great speakers coming. So join school, even if it's only for 1 month, so that you can tune in Saturday and Sunday to see what all the fuss is about. Also, I want to let you know there's only 18 tickets. Yes, again, Ty twisted my arm the other day to allocate an extra 20 tickets. Once these are gone, they are gone. So we have 18 tickets left. If you want to come to the event, go to Eventbrite, one rental at a time, and you will see it there. Fed Bowman thinks more interest rate cuts are coming as the job market weakens in 2026. It is showing that Americans' paychecks are actually growing stronger. How can that be? Well, what's happening is real wages, not nominal. Real wages are actually positive for something like the 39th month in a row. Real wages in 2025 were up 1.42%. What is a real wage? You take the nominal wage growth, call it 4%. You subtract inflation, call it 2.5%. You get a real wage growth of 1.5% in that simple example. So again, real wage growth is really the only way we get out of this affordability trap. Unfortunately, it's just going to take a long time. We are now in year 4 of this affordability issue. And then finally, I read an article about how smart people get rich. You know, I love reading titles like that. So apparently in this article, they highlight 5 strategies that the wealthy use on purpose. And here they are. Number 1, they use leverage to acquire appreciating assets. Think real estate. Number 2, building multiple streams of income beyond a single salary. I actually took that from the Uneducated Economist, who basically is on record saying your job sucks. You can't get it done with a job. You need to do more. And strategy number 2 agrees with Simon. Number 3, ruthless focus on long-term compounding and patient investing. Obviously, my rule number 3 is it takes a decade. You need to let time do what time does, i.e. compounding. Number 4, advanced tax optimization and legal taximization. I didn't even know that was a word, taximization, but whatever. Pretty cool. So again, use tax code as a reward system, not a penalty system. And finally, continuous investment in high income skills and self-education. Love that list. Let me know what you think in the comments below. Again, folks, this is the daily financial news. I think we do need to be careful as we started this video. Sell America seems to be picking up steam. You can look at the dollar. You can look at the 10-year. You can look at precious metals. Interestingly enough, you can't look at Bitcoin, which is interesting. But again, we might see more and more folks sell U.S. assets like stocks, like ETFs, and repatriate those dollars to local currencies. So be careful out there. And then finally, let's give Dan Bird a shout out. Dan Bird on Sunday warned us this week would be ugly. And boy, was he right. He got another thing right. Shout out Dan Bird. If you're not checking out Dan's videos on Sundays, you're missing the cheat code because Dan got it right again. Lastly, folks, don't forget that Steadily is the sponsor of the Daily Financial News. They are continually helping landlords make sure they have the best insurance at the best rates. If you are a landlord, you need to get second and third opinions. Go ahead and let Steadily help you if they can. They help us about 60% of the time. And then finally, don't forget to join school so you can live stream our Vegas event and see what all the fuss is about. Thank you very much. Take care. Later.